We're here today to talk about money. Yay! It's my favorite thing.
Money or talking about money?
What?
Money or talking about money?
Money. But we like to talk about the things that, we like, that we want, or anyway. But what also people don't realize is money costs money. It's like, once I get $1 million, I'll be set for life. It's like, no, just more money, more problems. It's true. So money, in my mind, is a tool, and we need to understand how that tool works in order to make the most of how we can apply it. So let's start by talking about our business, because we're entrepreneurs and we're here to talk about business. So I think a lot of us have seen these type of stats before, but in numbers of businesses in America, and this was in like 2017 or 2018, 22 million businesses are basically solopreneurs. They have maybe 100K or less of revenue, and then go to the next level, 1.7 million, 100 to 300K, 1.9 million, 300 to a million, and then you start getting down in like from 900 to 200 to 6. So the chance of making to this crazy, big level, the odds are, steadily declining. But also the solopreneur and the partnership level, those first 3 levels are sometimes the sweet spot that give you a lifestyle that you want for your family, allow you to make an impact in your community. And that's where the bulk of businesses lie. And that's, I think, the reality of what we do day in and day out. And what we're trying to do in an incubator program here is help maintain and provide for the lifestyle that you want and the community that you live in and how you want to make impact. So because of understanding the nature of the economic factors of business, our business is not an asset. So some people think that I'm going to leave this business and to my kids and it'll be great, they'll have lots of money. It doesn't always work that way. If we go back and watch Hank's about Be Sell Ready, it takes for your business to be successful and leave a legacy, your business needs to have cash. It needs to churn cash and be positive cash. So again, we're back to the money thing in order to actually create a legacy. So money is the tool, and we need to understand it a little bit more. Sometimes it's an intangible thing that people don't quite understand. And so I like to refer to money and water as analogies. So just to create water is dangerous. And you have to be careful about how you can do it, and you have to use other elements to get the result you want. Converting it from gases to actual liquids is a challenge. So our business is, in essence, making water, and it's risky and it's dangerous. So who can think of, I'll throw out a couple first. So money can be channeled into an investment. The sources of capital can dry up. There are all these colloquial phrases that are inherent in when we're talking about money that are water reference. So anybody think of some other ones? Flood the market.
Cash flow.
Cash flow, of course, yeah. We have laundered money. We have liquid assets, solvency, slush funds. I'm going to pump money in, frozen assets. So let's continue this analogy. If I had a pitcher of water and I'm just going to come and pour it in your hand. Ready? What's going to happen?
It's going to go everywhere.
It's going to go everywhere and make a mess. Is that what happens sometimes with our actual money? Because we don't have a container or we don't understand it. So it's like, where did my money go? I got paid Friday and now it's gone. So it's kind of hard to hold. It's kind of elusive. What if we have that container of water and we just leave it outside and don't mess with it? What are things that could happen to it?
Freeze right now.
It would freeze. It could go stagnant, like it would start maybe getting debris in it and get algae and not be very usable. It could evaporate, so it's just gonna naturally get less and less. If you put it in a container and store it, I mean, you could still have evaporation, but your chances are less if you get an airtight seal. I think evaporation of a lot like what inflation is. Over time, our money that we had is not worth the same in the future as it is today. That can go either way, but. If you have that container outside and it rains, I mean, you could just get lucky and get more in there. So that's kind of not a reliable thing. We need water to survive. I mean, we need it to drink, for hygiene purposes. So we need to have a strategy about our water and where the sources of water come to us from, what we do with the water, and how we manage it and conserve it, use it wisely to grow a garden, things like that. So it's the same with money. And as founders in these type of enterprises that are solopreneurs or small entities, you're really gonna need to be your own CFO. So you need to understand enough about the water strategy so that you can talk to the other players, talk to your accountants, talk to your bookkeepers, or things like that, to make a financial plan. Because you need to be the one deciding what's going to be in my water reservoir, how much am I going to pay for this, where's the revenues coming from, things like that. So as a founder, as a CEO in your business, you should really lean on yourselves and your partners to be that financial strategy. So knowing enough about it, not saying you ever have to be the actual accountant, but any questions, comments? All right, let's see, I gotta get to this other, okay, cool. So there's, in my opinion, there's the first layer of managing our money is the operational aspects. So that's gonna be where you have transactional accounting, and this to me is just the basic engine of any business, no matter what you're selling. You need money in, so you have to have orders, you have to ship, those orders, you might have to produce them or keep inventory around to make lead times lower, purchasing, you can have receiving, you're gonna pay your vendors, so accounts payable. So you're gonna have this whole constant thing of money in and money out, money in and money out. This right here should always be flowing, and the process that you create for your team of like how I get orders and what systems are those orders going in and who's gonna fulfill those orders. And right now it's maybe you and you're doing everything, but figuring out if you had more orders, how would you plug in additional people to those processes? And this is also where having the first hire or maybe an outside service that you might get as an entrepreneur is a bookkeeper service. You don't have to get an accountant, you can just get a bookkeeper service. And then they will help you make sure your monthly reconciles with your banks are doing good and that some of these transactional things are actually getting posted and recorded in the right way. So that's really important for consistent record keeping. That's gonna help in the financial strategy side because now you're gonna be able to get reports and maintain some data integrity in that will help you make decisions. So this I feel is one of the very first things that should happen as you start getting some revenues going, that you have some basic operational process flow. And now we get into, once you have that data, now that's where your strategy side comes in. So there's things like KPIs, which are key performance indicators, or BI, which is business intelligence. So those are the types of reports that you can start analyzing if your data is consistent. So It could be how many sales by customer, how many sales by product or product category, what is my profit per customer, profit per product. You might look at regional data and see I have a lot of sales here, but I'm not having any here. Why? So this is where that as a CEO, you should be looking for what kind of things, strategy, if you're forecasting, if I have this much revenue, what will happen, stuff like that. All right, so now the fun stuff of profit. There's different kinds of profit. So we have the top line revenue that comes in. We get our revenue from our customers and or potentially return on investments, but usually at this point, revenue. Without revenue, we don't have a business unless you just have somebody funneling money to you. But if you're not collecting money from customers and your customers aren't paying, then that's where all these other things cascade from, is at least having revenue. And then there's going to be some type of direct cost that you have to spend in order to sell that one widget. There might be actual goods like raw materials. There might be labor, cost of sales, credit card processing, free freight, tariffs, commissions, warranty. Figuring out that costing model so you can have your minimum sales price, and then you can start really planning the scalability of what that looks like for you. So your revenue minus these direct costs is the term that's called gross profit. And then you have fixed costs. So there's certain things, if you are renting a space, that you have to pay the rent whether you had any sales that month or not. So that's fixed. They don't go away regardless of sales. If your sales increase, your rent doesn't change. As long as you can fulfill your orders and you have the space that you can fulfill, you're going to be that rent's going to stay the same, and your sales are going to be able to grow to a certain point, and then you might need a larger space.
Unless you rent someplace like the mall where it's based on your sales.
Oh yeah?
Yeah, the mall. Yeah, well, the malls have been shifting to that model.
Interesting. Well, that might be beneficial then.
They might survive.
If the kiosk is only a percentage of my sales. So the software subscriptions, right now I've seen a lot of people where they get, I forgot I subscribed to that tool and I got this tool and I'm doing that tool, and you end up with, those things can add up. So managing and making sure you're only using the softwares that are really, that you actually do use and that are helping you in your business. All right, so that's fixed cost. Also could be some like operational or administrative, other words. And then after that, after you have those, I like to call it discretionary profit. So we have our revenue minus our direct costs. That's our gross profit. And then we have our fixed costs or our overhead, payroll, things like that. And that leaves us with money. That money is what I call discretionary profit. And I think it's really important as business owners, as we talk with banks and potential investors, that people, they understand that we have this discretionary profit level that hopefully is in that 20, 25, 30% range. Because now what we are doing with that money is we're reinvesting it. And we need to be very conscious that once we cover our direct costs and our overhead, that we are consciously spending profit. If we need to buy more inventory so that we can have more sales, well, that inventory growth is using profit to grow. If we're ever advertising that we're doing, product development, all of these other kinds of ancillary things that, while they are necessary, like advertising to increase sales, it doesn't necessarily guarantee that you're going to increase sales. So it's a cost that you have to determine what's the right thing for you to do. So I think that was kind of one of those aha moments for me of realizing, even though after I spend all these tax deductible expenses and I'm left with a taxable profit, that taxable profit is not the actual cash that my business is churning, because I'm doing these discretionary things. So that's important to have that number as you're talking to other bankers, because these are optional things, and you get to decide how to spend your money. And then it's kind of like, we don't want to have two sets of books, but the numbers we want to be able to present to our bank. So as we lay out the chart of accounts, that we're clearly showing those different profits, our gross profit, our discretionary profit, our taxable profit. Then we can create reports that tell the stories that we want to tell. And then our tax accountant, which is the other thing that you definitely need to have, the person that does your taxes doesn't have to be the same person you hire for your bookkeeping. But having a really good tax accountant that is going to help you. There's so many laws changing right now with the COVID stuff that happened and different programs for tax credits. So it's really important to make sure you have a good tax accountant. But the way your books will look after he or she's done doing your taxes, and the net profit that shows to taxable income is going to look different than how you tell the story of the money and where the money's flowing in your business, and how the money is getting spent. So, any questions so far? All right. So what I was going to do now is go ahead and bring up my actual little spreadsheet tool, and we can talk through some actual scenarios. So this is kind of a tool that we can use to forecast different businesses. So the things that we have revenue, and let's say you might have different ways that you get that revenue. You might have some B2C, business to consumer, direct to consumer, like on your website. You might actually sell to some wholesale accounts that resell for you. You might sell to you might sell products in one lane and different products in a different lane. So those are what we call channels of revenue. There's different terms for that. So you're going to have some revenue that you can plug in if you have more than one channel, and then you can have your gross margin that you've kind of figured out for those different channels. So if I'm doing direct to sales on my website, I might be able to make 60% on that. So my costs are only 40%. If I'm selling to a wholesale account, maybe I have to sell it to them at that, I don't know, instead of making 60 points, I'm going to make 40 points. And so they can make money as they sell. So you can have the different gross margins for the different revenue streams, and then we can calculate our cost of sales, which is going to be credit card processing, free freight programs, allowances for warranty and replacements. So you kind of have a factor of what you think that will be. You can plug all those in, and then that will give you that gross profit margin. So now that number, we have our fixed cost. So we have salaries, payroll expenses, and our overhead. And then that leaves us with working capital. And that working capital is like, okay, well, how are we going to spend that? And you get to decide some discretionary. And then there's some either balanced working capital and or profit, depending on which way you want to look at it. There's a tab over here where I can go and put different, estimate the overhead expenses, and that, whatever that total is what gets plugged in to that other number. And then there's the payroll, where you can kind of estimate what payroll you're going to have. So that will feed in over here for your fixed costs section, those two fields. The other thing, like if you guys have ever heard, there's a guy that wrote a book about profit first. So it's also fun to kind of budget and thinking that way. So the way this actually works and why there's a number 2 right here is whatever this top line revenue is, and I actually wrote it. We're factoring profit first. And so this number is a number. If I need more working capital, if this number went negative, then I can come in and say, all right, well, I'm only going to have taxable profit of 10%. So then, or I could even pretend, like if I don't have enough revenue, I can just leave that at 0 and not worry about that right now. And then have my working capital that I get to decide, discretionary spends.
How would you recommend managing rainy day funds, where you just kind of set aside for some savings?
Yes. Oh, I think that's very important, and that's one of the discretionary things that you could do, is to allow for savings. And I would recommend kind of thinking of it like the envelope system. So have your one main bank account that revenue comes into, that you connect to your merchant accounts or whatever, and then have a separate account that you put savings in. And you can get, the banks don't care, and they're all free checking accounts for small business. So have as many envelopes that you want and move money to the different accounts to help you budget. It makes it easier if you don't see it in that one main account and it's kind of over in savings, then it's kind of out of sight, out of mind. And that's what they kind of recommend on the profit, like for every $100 of money, just put 10% over in a savings account and try not to touch it. So it just depends on your business and what state of growth you're in. I mean, a lot of times we're not that fortunate to not be able to touch that 10% because we're still trying to get to a break-even point. So it just depends. If you're in a service-based business, highly recommend that you move that money over there. So understanding, there's some tools too of like, if you're in an inventory-based business where, you might have to buy $1,000 worth of inventory and it's going to take 3 months for that $1,000 to sell, but that's the quantity you have to buy from the vendor. So now you need to kind of strategize for every sell, put money in to replenish the $1,000, to put that cost back into a bucket so that you can go buy the $1,000 again in 3 months when it sells. So those are some tactics too that you can use a bank account for. So you can just move your cost of goods into a cost of goods bank account, move profit and savings, like keep some discretionary one in a bank account. And then you can use a tool like budget sheets to help manage all those bank accounts. All right. Thanks for joining.